Hello and welcome. Something I have thought in the past about doing is writing a book or material on really that of trading, making money as people like to do. And the more information you can get, the better off that you'll do, which is why it's an industry of selling information, which has which is a very good one for people to persuade themselves into. Now, I'm not going to do such, at least I don't have any plans to in the near future. I'd rather do it this way where maybe I could go over something I would be writing about. I'm going to do the topic stated within this video. And on the bottom, if there's anything you would like answered, well, this is one way to try to figure out what people really are, what questions they want answered. One of the things that I could write are what are the most common mistakes people make, and I could try my best to answer that. It was a lot easier to do so in other subjects like in poker, especially when I would literally be playing with the opponents really frequently, and then at the card tables talking to several dozen different players. Oh, it's really easy actually to figure out their mistakes, but I don't talk to that many traders. And when you're buying and selling, the interaction amongst each other is nothing like it is in poker. So I really couldn't answer that too well. Now, it's interesting when I watch videos on trading, especially the older ones, the stock market ones, it seems every single one are big among stop losses, and it's almost like it's a deadly sin if you don't use it, or only losing players don't use them. Well, I'm winning. I have never in my life ever placed a stop loss. Ever. I never plan to do so. So therefore, I actually like talking about subjects that are basically the opposite, contrarian to what the popularity happens to be. Now, one subject I think is very important, and I think if you're talking about mistakes that most people would make if they get too emotionally driven, and I know for sure that when you let emotions take over, especially the short-term fluctuation ones, that gets you in the grounding situation where you're emotionally high or emotionally low at major levels, then that can be very dangerous within trading. And computers don't care about situations. When they're programmed to do something, they just do it. And that's what I do myself as far as a lot of my entry and exit positions. I don't care what's going on. I say to myself, this is what you're supposed to do. Market's up here. The strategy is to sell when the situation comes in, and you just do it. You see the situation, you do it. That's what it works for me. And risk reward management is job number one. I really find it interesting when I hear so many people talking about how this exchange is going haywire. This market is moving wild. Like that's not a surprise that they'll do it now and again. And people talking about how they're losing their shirts. Okay, but good job in risk reward management, I guess. And of course, when I say good job, I'm meaning not a good job. But okay. I got myself in a situation where any type of regular, normal type of movements are not going to affect me in that type of level, especially because I've lost my emotions to the point where I don't need them. Buyers, sellers, bidders, askers, who's in control? How can you figure it out? Well, market's going up and down. It's easier to tell who the buyers and sellers are in control. But if you look at different order books and just look at the bidders and askers, trying to determine which individuals are bidding or asking like crazy to get in or out. Understand what it means when big and small amounts of bid and ask orders are in place. If you see people putting in, say, big orders to sell, for example, that means the askers are looking to be in control, especially if you got a bunch of them where ones are outbidding each others. What does this mean? Well, it could mean a couple things. Like, for example, if big buyers see that there are big askers, then that just might bring them to come in and buy. Thus, that can spark a nice bull market rally. It could also mean that these askers who are trying to get out of the market or try to liquidate might become that of sellers. Same thing when you got a lot of bidders trying to get in the market, thus getting cheaper prices. If the sellers aren't coming in, they could easily become buyers. I remember using math in school and having questions of like 43 is 38.5% of what? And these are the exact type of numbers that are important within trading. Or just I loved regular algebra in school. Like questions like x subtract 9 squared is equal to 4x minus 4. What is x? And a lot of math geeks can answer that question in under 30 or 40 seconds. A lot of people will look at that and have no idea what the answer is. And you're never going to use this type of equation in any type of trading, but using this type of logical thinking to equate these answers is a type of logical thinking you're going to have to use within the mathematical realm of trading. Understanding things like variance, the law of average, probability, chance. For if you're going through situations, and I can tell you something where if you do this 100 times, you have a 76% likelihood of being correct. Yet if you only do that play 4 times, well, it's probably going to win 3, but it could hit 4 times, it could hit twice, it might hit once. And who knows, it might even hit 0. And you can do the mathematical chances of figuring that out. That's part of the mathematics. But when you're able to go through the variance and get your sample size higher, that means the fluctuations should come into play. So understanding that, I think, is very important. If you have the opportunity to program, whether it be via code, if A is equal to this, do this. Okay, execute this part. That's computer programming, putting spreadsheets in together. Because even I had a small idea earlier today. What happens if you get your normal type of market that you have the obvious sideways range? This is your market going on. So if I were to put in data of like, say, thousands of tens of thousands of periods, have your computer distinguish when a range is noticeable. If you can't distinguish a range by this point, then I don't know what to say. And you'd think the mathematics is you'd establish where the low is. Computer programming, with good programming, you could figure out what the number is. Thus, once you figure it out, you know where your automatic buy is. You know where your automatic sell is. You run this situation over and over, say over thousands of times, you get some good mathematical statistics. Now, in a such situation like this, where would your stop loss be? And I say I don't use stop losses, but I have strategies for those types of spots where, say, for example, I was to buy the range game, where you buy the lower end of the range, you sell the upper end of the range. When markets just shoot up and break higher, well, when it goes higher, you're not going to have anything because you're selling at the top end of the range. But if you're buying here and it keeps going lower, at what point do you have the area in which you sell? And for me, instead of having a stop loss here, when I realize that I've got a losing trade, then I'm going to determine where's the best selling point. And in a spot like this, on one leg lower, it would usually be at where you bought it. And if it goes down even deeper, then once it goes up a bit, okay, maybe I'll sell here. I look to sell when it's up decently from wherever the last low happens to be. That's my strategy. At least there's other different situational events, of course, that can come into play, but just something to consider. And the more stuff you can do, the better you become in increasing your probability odds for your return on your investment, because the more you know, the better you do. Well, that's going to work within the result. Now, if there's any questions in which you are looking to ask about, whether it's more detailed information amongst the subjects you have, or anything of that type of nature. I mean, I'm not going to answer questions about ICOs or fundamentals, but if it's something I can be able to handle, I'll put out some answers over the next few days. So thank you for tuning in, and take care.